You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to, watching the Financial Survival Network. I'm Kerry Lutz. Well, when you look around at investment opportunities to get a decent rate of return, to maybe even keep ahead of inflation, well, things look pretty bleak, but all hope is not lost. Christoper Nelson is with us explaining why equity is everything. Christoper, you started as a tech entrepreneur, and you've been helping people to build equity in companies. Now you're in real estate, looking at passive income, but the same principles that you were teaching people for, joining tech startups, et cetera, still apply, don't they?
That is correct. That is correct, Kerry. And that's always worked for equity, right? And we learned this basic principle from Robert Kiyosaki when it's at some point we need to stop trading our time for dollars, and we need to actually own portions of companies and or assets that will continue to cash flow, increase in value while we sleep.
Yeah. So make money while you sleep. That's kind of the hallmark of the internet economy and of real estate investing. All passive investing is you don't have to be boots on the ground, actually doing stuff to make money. You pick your investment wisely, and then it makes you money while you're sleeping, mailbox money, whatever you want to call it. So tell us how you arrived at this epiphany.
Well, I mean, I think I arrived like most people, where I started out with not a lot of money, and I decided to get a education in computer science. Graduated in 2001, which was right after the dot-com boom. But the interesting thing was, there was still an active job market. While there was, I would say, a lull for, let's say, 6 or 9 months, the job market got very active again, and I saw technology recovered very quickly. And so I soon found myself working for a very well-established company, learning a lot of skills, but I realized that for as hard as I was working, I was not really making what I saw other friends making who were actually, taking a risk and going to work for startup companies. So I said to myself, why don't I take this asset that I have, which are my skills that I've built at this very established company, go trade that for equity in a startup? And I think, like many people, my first swing was a huge miss and a huge failure. But what I made sure to do was I made sure to review everything that I did to get to that point. And I realized I had to make some serious adjustments. And quite honestly, one of the things that you drew out earlier is that I just looked at, I have to invest my time and my talent the same way that you invest in the stock market, in real estate, et cetera. So you have to have a risk profile. You actually have to have a due diligence criteria. So I created that for the technology companies that I went to work for. And guess what? The next one I went to work for, within 11 months, had gone through an IPO and generated a multiple 7-figure payday. And now I've created that into a process where now it's not easy, but it's rinsable and it is repeatable.
One of the big things, Christoper, is that when people do come into a lot of money, whether it's a stock market or a career, IPO, whatever it is, you're often stuck in a place where this money came very easily and it could be lost very easily. And you're often kind of like in a real quandary, and your emotions take over, and that's when you make the bad decisions.
It really is. And it is so interesting, because people always ask me, what was that first IPO day like? And it was this amazing moment, this amazing party. And then going home and seeing my wife, who was pregnant at the time, and saying, okay, when can we buy the house? When do we actually get the money? And I literally went into the living room and just melted down and said, wait a second, I don't want to be the idiot that gets this and then loses it. But what I didn't realize is there is sudden wealth syndrome. It is a psychological syndrome that creates a lot of stress, anxiety, loneliness. You don't know who to talk to or consult. So it is real, and emotions can rule reason. So that is where then I started, getting a lot of education, getting a lot of information, and seeking people who had two things. And I think you'll get this, Kerry, is somebody who's like-minded, right? I wanted somebody that was conservative, grounded in fundamentals. I didn't want to go all in on some fly-by-night investment, but who's grounded in investment fundamentals and has been successful in this before. And it was sort of those pieces that allowed us to get educated, start making smaller investments, build confidence until now, we've, diversified, over half of our holdings into commercial real estate.
Yeah. And let's talk about that. So real estate for generational wealth, for wealth preservation. And we're not talking about you get the fancy crib, if you will, like
right.
MTV cribs, where all these athletes and rappers and everything else that come into major money, and the first thing they do is buy the elaborate mansion. I've heard it said before. I'd like to get your feedback on it, Christoper. Living beneath your means.
Living beneath your means is essential, right? And it's interesting that it's a slippery slope, especially in places like the Silicon Valley and the Bay Area, where I was living at the time. You can actually fall into that just trying to actually live a normal lifestyle because of the fact that housing prices are so high. You can overpay for what looks like an average home that costs $2.5 million. And so I think what's so important is, and this is what I try to tell all technology employees or people that are working for equity, is everything has to fit within your paycheck. You got to have everything fit within your paycheck. Then you can enjoy your bonus, and then you invest all your equity. That is something not to touch. And I think that, to your point, if you can live then below your means, and in our attitude was always put the equity into its own LLC, its own business, that we then have to make a very concentrated decision to move money out of that, because we didn't want to make it easy for ourselves, because this lifestyle leakage, living above your means, for people that are in equity who get the golden handcuffs, I say it can lead you to the golden jail, where I know people who are having to then find other equity positions, keep working so they can maintain that lifestyle. But it's a slippery slope. And it can, just step by step, unintentionally, walk you to a point where you are burnout, but you have to keep working to maintain it.
All right. So let's talk about real estate investing today. You have a lot of ways to go about it. A lot of real estate is really overpriced, yielding really kind of pathetic returns that you'll be lucky to keep up with inflation. Although if inflation keeps up, the actual equity that you have in the property will increase as the value of the dollar goes down. We know all that, but what's your favorite sector right now?
Don't just survive, thrive. The Financial Survival Network.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
My favorite sector right now is the mobile home park sector. And, very interesting journey because, starting in, 2015, 2016, like many people, we were participating in, the meat and potatoes of commercial real estate, which is multifamily. And we had the opportunity to get in where, cap rates were not as compressed, and we were getting 8, 9, 10, 11% cash on cash return. able to do cash out refis, et cetera. That is not the state of that asset class today. And you said it before, that will now expand your equity. It's a growth tool, very similar to the stocks that we're in. Obviously it has depreciation and other benefits to it, but it's not giving you the cash flow. Mobile home parks, very interesting asset space. Number one, there is shrinking demand. Mobile home park spaces are being bought up. We witnessed one where we're investing right now in Fayetteville, North Carolina. There was a Class A developer who purchased the mobile home park, 100 units, and tore it down just because not in my backyard. They turned it into a park instead. And so there's such a need for affordable housing. There's a lot of headwinds in the market from a demand perspective. Supply is shrinking. There's a lot of opportunity.
Right. So this is an interesting thing because on the one hand, like communities talk, we love to build affordable housing. Where I live here in Palm Beach County, they wanted to push a $200 million bond issue to build affordable housing. And we could debate whether government should be building anything other than hopefully their own graveyards. But look, there is a shortage. They came to the conclusion, not right now, because with inflation, with costs going so high, they don't want to add to the tax burden and in parens risk not getting reelected. Right. So the government's not going to do it. Obviously, these mobile home parks are a way of doing it, but they're kind of like kryptonite. No community wants to touch them unless they're very rural, undeveloped communities. So they're kind of like a scarce resource, like landfills, right? Not that they're like landfills, but it's very difficult to build a new one.
That's correct. It is. And the reality is there's a lot of municipalities that have a large volume of them that, the interesting thing is that, being down in Florida, you've probably seen a lot of the 5-star retirement communities, but there are, and where there's a lot of opportunity and a buying opportunity that we're witnessing, participating in right now is, sort of the B-class mobile home park, something that would be a 3-star to a 4-star mobile home park. We're still finding that there's a lot of mom and pop operators who've owned it for 30 or 40 years, have little to no debt on it. They're running it as a cash business. So that means what is the cash that they need that month to cover their, operating costs and to put money in their pocket. And sometimes we just literally took over a park, Kerry, that was at 30% occupancy because the owner didn't like people and was able to get the dollars that they needed because they had no leverage on the park. We're able to take these over, do a upgrade on those existing homes and get people in there who need that housing very quickly. And so the interesting thing is in this asset class, there still is a lot of opportunity right now, while other asset classes tend to be very frothy.
So your view on things about where the market's heading, about the opportunities here. Do you think investors have missed the boat, that we've already seen the bulk of the appreciation, inflation induced, and scarcity? Or does the housing shortage continue on and even get worse, Christoper?
I think the housing shortage will continue, and it will get worse because I think the inflation that's at the top is really pushing a lot of people, I would say, down market, right? The people are getting priced out of the A's, are getting pushed to the B's, to the C's, that are then getting pushed to these mobile home parks that, quite honestly, we don't have enough of that level of housing. And so we literally put a home up for rent the other day, and we had in less than 24 hours over 200 applicants. And this is in what would you consider a secondary or arguably tertiary market to Raleigh, Durham, and Charlotte. You're seeing that type of volume and that type of demand for the housing. I think what we're seeing boots on the ground is that, I would argue that, workforce type housing, whether that's C-class, multifamily, or, mobile home park, or whatever other category of affordable housing you see, that there is a deluge of demand for that. And so those asset prices, especially because there still is a lot of buying opportunity there, because the assets that I'm seeing overpriced are either going to be in first or second, tier markets, and are really sort of those B and A class. I do think that when you get down to that C and affordable housing, you'll find that market, there's still not that appreciation there, because you don't have, professional owners and operators.
Hey, and one thing I'd just like to point out, for those of you out there who think that the government injecting itself into housing is going to create more low-income housing, more middle-income housing, it doesn't work that way. Studies have been done in New York during the 50s when New York was at the height of its project building prowess, if you will, 50s and 60s, that for each unit they built, they actually destroyed more than one unit, sometimes several units to build them. And when you consider that, government is not the one to be trusting for this, for sure.
Oh, 100%. I mean, and this is what we're literally seeing in the markets is, as they're giving the ability to build these Class A apartment buildings, they're taking down, as I just mentioned that example, those 100 units that were taken out, those people had to go find another place to live. They had to go find other parks that, again, in this shrinking demand, but there are not a lot of workforce housing apartment complexes that are being stood up in the same area we're operating in.
At one point, I just want to emphasize, mobile home parks have a really bad rap. I mean, usually if you watch television, you think that only serial killers live there, meth heads, that they're centers for meth labs, and generally a very low quality of life. I know that to be false because there's a number of them not too far from where I live, not that close, but not too far. And they're very neat, clean, well kept. And the people all appear to be people who are, trying to better their lives.
They are. And I mean, it is actually a great opportunity. Generally speaking, a mobile home will be 1/2 the price of a 1-bedroom apartment, but you're going to have, 2 or 3 bedrooms in there. So you can have small families having that at a much more affordable price. And you're dead on in the sense that there are a lot of hardworking families that do need just solid, safe places to live. And that's truly our mantra is let's focus on physical safety, people that are abiding by the rules, people that are, adhering to laws, focus on that first. And then let's also continue to, help support the residents in whatever they need.
All right. Well, hey, just one other question as far as
Sure.
Parts of the country where you're focusing in on, what areas you like the best?
Right now, I mean, we're really partial to the Southeast. I mean, you will find that there's a density. We're operating right now out of North Carolina, which North and South Carolina have some of the, most dense populations of mobile home parks, but you'll also see that come down into, Georgia, Florida. We're also now even exploring some parts of Mississippi as well. That's really where we're operating, where we also have, the ability to, manage the properties that we see fit, and we don't have, overly legislative bodies in there, if you will.
Yeah, I gotcha. You want more landlord-friendly jurisdictions. Hey, when we have you on next time, Christoper, we'll talk about the mechanics, how it works with people buying their trailers or renting them.
Oh, sure.
Et cetera, because I know you out there would be interested. Christoper, if you want to find out more about you, about what you're doing, where do you go to?
Well, if you're really interested in what we're doing in the mobile home parks itself, go to thrivecommunity.fund, where you can learn more about our offering. And then you can learn more about me at wealthward.com. That's wealth and WARD, like moving you towards wealth. You'll see everything we're doing to mobile home parks, ATMs, and also we are still doing some multifamily here in Central Texas. And then anyone who wants to learn how do they trade their time for equity, I am kicking off Tech Careers and Money Talk in May. It's going to be my podcast following suit after Kerry, where I just really want a no-nonsense approach of how do you really invest your time and talent for equity.
I love it. And we'll be a big fan of that, Christoper. If you got a question for Christoper, you can always shoot us an email. The address is kl@kerrylutz.com. Don't forget, go to financialsurvivalnetwork.com. Sign up for your free newsletter. Hey, Christoper, been an absolute pleasure, and we'll look forward to speaking with you again.
Thank you so much, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.